Hi dear traders! Previous trading week ended with significant event. The jobs data released in the US dashed hopes of even the most optimistic market participants. The US labor market added almost 517,000 new jobs in January, which is why the Fed is sure to pursue its aggressive monetary policy until it brings the interest rate above 5%. Now let's discuss the market sentiment in the forex and commodities markets last week. In the middle of the last week, the US dollar index, which demonstrates its value against a basket of 6 major currencies, was consolidating near the 9-month low, following the Fed's decision to raise the rate by just 25 basis points. However, as the fresh macroeconomic data sparked speculation that the Fed may continue to tighten monetary policy, the greenback recovered and was heading for new highs at the close of the session. Eventually, it ended the week at the level of 103. Meanwhile, the euro-dollar pair was testing the support level of 1.08 at the close of the week. However, the investors still believe that the European Central Bank will maintain its hawkish stance. On Thursday, the European regulator signaled that it was going to hike the rate by another 50 basis points at its next policy meeting. Still, given the current rate of the euro-dollar pair, we can see that traders are more interested in the US dollar. The ECB may turn out to be less aggressive compared to Federal Reserve. The Bank of England also held a policy meeting last week, yet market participants did not expect much from this meeting and lost their interest in the pound. So a rapid plunge in the quotes that followed the publication of the US employment data was rather logical. It simply extended the downtrend of the pound-dollar pair that was formed on Thursday. The most rapid change in the market sentiment was observed in the dollar-yen pair. Still, the yen was trading near its highs recorded in May 2022, gaining support from the speculation that the Bank of Japan may abandon its ultra-loose monetary policy. However, the regulator kept its policy unchanged in the previous month. Traders will be monitoring next meeting of the central bank in March to get hints about its steps in April when the new governor takes over. The commodities market also saw some changes in the trend of gold. The yellow metal slumped below $1,900 per troy ounce and approached the key level of $1,860 by the end of the week. The demand for gold decreased due to uncertainty around the next steps of the US Federal Reserve. A stronger US dollar had naturally affected the value of oil. Thus, Brent crude dropped below $80 per barrel, although its decline could be temporary. Oil traders are more likely to rely on the latest positive macroeconomic data from the US, which eases the threat of a recession for the US economy. Besides, the OPEC Plus grouping decided to keep the output volumes at the previous level amid the unstable recovery of the Chinese economy and the latest sanctions of energy supplies from Russia. These are the trends of the last trading week. And now a new week has begun and new events are ahead. Don't miss our daily news reports to be always in touch with the latest events. Trade with profit and see you soon.